Hello there, Sprinkles. I'm giving you a very special, juicy update because I can't do juicy news today. I did not want to leave you hanging. I think it's very important, friends, that we just cover this Ray Dalio article because it's extremely important, okay? He's going to summarize where we are in the entire business and economic cycle. And there is a bit of doom and gloom, but I think it's important for us to basically measure up where crypto is compared to stonks and AI, which he does call a bubble. Okay, so what I just want to reiterate is look at Bitcoin and the monthly candle. Okay, friends, if you put this on a linear chart, you're like, whoa, bubble, dude. It's a giant, big, fat bubble, dude. Of course, we can see that, all right? But there's more to it than meets the eye. We know the real Bitcoin chart and any chart all comes down to dividing by the M2SL chart. So you pretty much remove the currency money printing. I think it's very important. And then this is BTC. This is it. Bitcoin divided by M2SL. And right now, it's actually only about 50% above its 2021 high. This is another way to look at it. This is actually what it looks like, friends. It's kind of cool. Just so you can see this. Remember, this is BTC divided by M2SL. Okay. Now, what you actually hear is everyone pretty much, whenever they describe any bubble or anything being high, they always do the same thing. They go from the bottom of the chart and they go, oh, wow, you've run up all the way from the absolute bottom. But all they're just doing is they're taking an arbitrary low point and they're just cranking it up to the high. And they go, oh, this thing went up, therefore you should have bought the low. Therefore, it's too high. There's more to it than meets the eye. So now with that context, we can explore Uncle Ray Dalio's article here. And I've actually got the most important points, critical points that I have here, including the summary. And it's pretty much, he's going to be talking about the Fed and QE. And I'm going to give you the gist right now. Okay, friends? So look at this part. He goes, it would be reasonable to expect that similar to late 1999 or 2010. So 1999 was a tech bubble, okay? He goes, it would be reasonable to expect if they printed money and the Fed did QE, there would be a strong liquidity melt-up that will eventually become too risky and will have to be restrained. During that melt-up and just before the tightening, that is enough to rein in inflation that will pop the bubble in classically the ideal time to sell. Or he says is classically the ideal time to sell, okay? And what he says is this time is actually different because the US Fed will be easing into a bubble, all right? Now what I'm going to do, friends, I'm going to show you the Nasdaq chart, okay, which is what everyone refers to, okay? Because you want to see, right, where are we compared to the past, right? When they say, oh, we're in a bubble, what do they actually mean? So this is a monthly chart, okay? So Nasdaq, friends, if you have a look at this, what we can do is let's get a nice pitchfork. And what I've done is I've actually drawn it here. So I got the pitchfork and I put it down here, and this is the Nasdaq, okay? So of course, friends, this is very subjective and it changes with each decade because the debasement money printing, yeah, there's an average of like what, 6.5% or 5.5%, but it depends on your decade, okay? Like right now they're running 7.5% to 8%. So what that does is that curls up the chart even more aggressive, okay? And when there's super high inflationary times, they can't do it as much, so maybe it goes down to 4.5%, okay? So I've done a trend here. So this is what you often see. So in the tech bubble, you understand the Nasdaq, friends, from like 1990 up to the top went literally 20x. This is the whole index did a 20x return in 90s, bro. What an absolute machine. That is freaking, but that deserves it, right? It's the internet bubble. You and I, we're friends on the internet. We communicate on the internet. I send you banana emojis. You give me a like and subscribe. We talk to each other. So it's powerful. The internet did go on to change our lives, right? So obviously we're going to be talking about AI later on. But if you draw this trajectory and this growth rate, okay, you can see, friends, there was a point here, right here. This is where it got messy. Okay, you can actually see it right here. So remember Uncle Ray Dalio, he goes, now the late 1999 bubble. When he speaks about that, this is what they're all talking about. There was a period, friends. So this is what actually happened. Okay, because look at this. The biggest retracement, look at this. It did 38%, 28%. But look what ended up happening, friends. In 1992, 3, 4, and 5, and 6, look what ends up happening. The biggest retracement was 17, and then 18, and then 14, and then 14. As you can see, friends, see, these are not retracement. These did not scare off and off people, okay? They did not go bang, bang, bang. You didn't have these, we call them healthy retraces because they basically shake out the leverage and then they continue up higher. It never did that, but look how long it went on for without basically shaking people out. Friends, we're talking about 1991 all the way up, here we are, to 1998. Okay, so you're taking literally 7 years of up only without a shakeout. Friends, imagine Bitcoin had a 7-year bull run and its biggest retrace was like 30%. And it just never had the bear market. All right. Now, you might say, well, what does that actually mean? What it means is the people that would be participating in year 7 are ultra weak hands. They're sidelined. They've been waiting for a big crash. It never came. They're watching the internet bubble up, bubble up, bubble up. They're watching pets.com, Cisco. They're watching all these IBM, Internet Booty Machine, all of these things. Microsoft, named after Bill Gates' Willie. All these things come out. They are changing the world. There's hardware, there's chips, there's the interwebs, Dungeons and Dragons. Everything's exploding. They're like, I'm going to get into the internet. And this is actually what happens, friends. The FOMO builds up. We move to the top of the regression channel, and look what ends up happening. This is where it absolutely explodes. Okay, this is the moment. So in this period, friends, this is what we call, when they talk about the tech bubble, this is what they actually talk about. They're talking about from here, from 1998 to basically the end of 99. Okay, so this is 1 or 2 year period where everything went literally parabolic. Friends, you got to talk about how big this is. If you want to talk about from the bottom of the Nasdaq, okay, friends, I'll tell you, it's just, friends, literally the index went up 4.5x. My gosh, let me show you what that would be like, friends. Like, imagine this is Trump tariff tantrum. Imagine this thing went up 350%. Where would it land us? Oh my gosh. Friends, the Nasdaq's at 25,000 now. Imagine I got to 75,000. It's game over at that point. If we got, look, I'm not even going to talk about stupid numbers like this, but look, why I call this stupid is we remember the tech bubble too much. All the boomers are still alive. So if it accelerates too much, they'll keep trying to crack the rates high. They'll try to hike rate. They'll try to kill everything. Okay, because what ends up happening is you attract too many weak hands up here. As you get to see, friends, you go back to the Nasdaq. This is what happened, right? So in a normal world, okay, the Nasdaq was probably, look at this, it was meant to stop here, come back into regression, maybe go up, maybe have a bear market, and then continue up. This was the GFC, okay? Maybe in this world, it wouldn't have been down here. If you never got this big explosion, maybe it was meant to like go down here, come back up, right? And then here's GFC. Maybe it was meant to make a lower high up here and then continue up, okay? I'm just going to show you the trajectory. And look, we would eventually end up where we are now, okay? We could end up where we are now. But that's not how markets and cycles go, right? That's why look what ended up happening, okay? They basically, the parabolic nature of this caused a huge 10-year lost decade, all right? Now, another thing you got to think about, what I'm just going to tell you, okay? Governments, friends, they can't stop it and they don't stop it on average. They just let the thing go because money's being made. There's tax receipts going up. Cash is being made. Businesses are booming. They're launching money on stocks. They're all cashing out billions of dollars. There's big economic activity. That's why on average, the government just lets this thing run off. It's just what happened in the tech boom was everything exploded, okay? So I want you to remember this. See what ends up happening. We hit, I guess, if you were to look back at this chart, you can see like, okay, there was this period here. We were meant to reset and it got really scary. And then there was this big wick, October 98. And look what ends up happening. Boom. Do you want to know what's funny, friends? Tom Lee, crowd favorite. Let's actually play some music for Tom Lee out here. When Tom Lee talks about, where we are in AI and tech, he talks about, oh yeah, we're like 1997, 98. That's what he says. So look, like, you don't know what happens next, and I don't either. We could, friends, be like the Nasdaq, it could be going sideways like this. It could do that while crypto has like some sort of mania in here, hopefully, and then everything comes down. And I'm just going to show you it up here, all right? We could do that, all right? So it could do that, wee, and then it continues up higher, all right? Big, monstrous rallies like this, though, it's unlikely for them to do that. When you have world-changing technology, okay? That's the key factor. The key factor is we've got ass intelligence, AI. AI, robotics, quantum, these things are exponentially deflationary, okay? We're putting AI agents, friends, on the internet. Robots are coming in, making you a sandwich, giving you a head massage, sharpening your pointy elbows, fixing your squeaky chair because it stopped squeaking. They come and they get the squeaky juice on, making it squeaky again. All these amazing things. You don't need to hire someone. They're literally a robotic slave. Think about how deflationary that is. You don't need to hire a maid anymore, okay? I want you to think about that. So maids and let's say maids who have debts out there, they can't pay off the debt because you're paying a robot. You're paying a company that's spread it out of nowhere, okay? So that's why the government has to print money. So they're basically caught between a rock and a hard place, all right? So we are somewhere here. We don't know what happens next, okay? It could be, that's why Ray Dalio, what he's going to say is, this whole point of Ray Dalio, okay? What he's saying is, look, we are Nasdaq here, okay? The stocks are obviously there. He says, if you print money, the next explosion will be a melt up. It will melt upwards. And he says, inflation will get hot and they'll have to hike and they have to pop the bubble. And a bubble will just pop itself, okay? That's what he's saying. But I want to show you, like, even though it looks like it's going to happen and it feels like it's going to happen, also, just to tell you, every single world-changing technology always ended in a bubble mania. Every single one. Radio, trains. Remember, friends, I made a video called Railway Mania. I remember this. Do you remember this, friends? 11 months ago. The sexiest bubble in the world, Railway Mania. Look at this. Back in the day. Level is See this, friends? The railroad juggernaut of 1845. So here I am. See, friends, I'm making these videos here for you. And it's funny, here we go, the daily market index of railway shares. So it actually explodes, friends. It explodes up. It does a massive, look at this, it does a massive 2x in 3 years, and then they all blow up. It's almost like altcoins, because what ends up happening is people underestimated the competition. Okay, just to let you know. Is anybody underestimating competition in AI yet? No. No, they're not. Okay? Nvidia has a big monopoly. Nobody can make those chips. No one in the world. That's why Nvidia's $5 trillion. That's why everyone's saying Nvidia's expensive. Like, dude, go make the chips. Go make the yummy salt and vinegar chips. You can't do it. Good luck. Good luck if you are a young lady with big boobies or small boobies or any boobies of that matter. Try get Jensen to sign them like you did in that lady. Remember? You remember this picture, friends? Jensen signed the boobies of this girl, okay? And everyone believed, oh my God, that's such a top signal. He's literally signing the chest boobie of this girl. Everyone's like, oh, totally a bubble. Okay, guess what? It blew up through the high. It still went up. It was only like 2.5 trillion back then. It's up 2x higher. Oh man, you gotta love it. That's real life-changing technology, friends. It's like a bubble that you just couldn't imagine. But look at the internet. There was no internet. Everything's going up, and everyone thinking, oh, bubble, bubble, bubble. Dude, it went on to change everyone's life. It did. So yes, the market's silly. It does get silly. It ends silly. But 80% of the pricing of the way, it's true and it's real. It's just that you don't know because the market's pricing in something in the future. That's why you and I are seeing all these explosions in AI. Not really. Like some of them saying, Palantir and all this other stuff. Dude, you can't possibly imagine how exponential these things are going. It's very important to know this, friends. That's why if you don't have this vision, you just see price go up. You go, everything's expensive, bubble. Everything's going to pop. Yeah, it's going to pop one day. But look at the Nasdaq I just showed you. 9 years up only. It's that final 1.5 years. It goes literally monstrously parabolic. Okay. I want to show you something again, friends, on that Nasdaq chart, just so like you have some context. Friends, one of the greatest traders in the world, I think Stanley Drunkenmiller. Okay, not Stanley Sober Miller, Stanley Drunkenmiller. He was short and he closed out up here. I think he got short here. It went too high. He closed everything out here and then literally started tanking. So I'm just showing you like, look, AI, friends, look, something can go wrong with AI. They could be miscalculating it. But what are the chances of Microsoft, all these companies, Google, Nvidia, what are the chances they're all wrong now? You know, I don't think so, dude. You know, friends, a lot of people wondering, why is the Magnificent Seven, some call it the Cry-Fagnificent Seven, why are they going up so much? Dude, they have the network, okay? You're going to use their AI. I'm going to use their AI. Apple is going to learn you and me how we talk to each other, okay? The emojis I send you. It knows, oh, Sammy, you got to send this person a banana emoji. Do you just want me to do it every time they post? It's going to learn you and me. It has our network. They've got us by the balls. They can squeeze if they want. Do you see? They have all the computing power. They have your habits, my habits. They know who we talk to. Like Facebook Meta Friends. It's got WhatsApp conversations. It knows like who your close friends are. It learns your habits. It can do that. It knows where your location is. Do you see? That's why these things are going exponential, because they can use this information with AI. Now, of course, some people think it's dystopian. It could be dystopian. Yeah, it is. But guess what? The new generation of kids, Generation Alpha, Generation Beta, very unfortunate name, they don't know any different. They're born in a digital world, okay? As far as they're concerned, Pokemon is always real, not just a fantasy. They know everything, friends. Everything is digital to them. Money is digital. Their friends are digital. They walk around with their weird haircuts in Roblox. They don't know what it's like to walk into a bank, wait in line for 4.5 hours. They just click buttons on the internet. This is the new generation. So that's why this thing is pricing it in. So bringing it back to Ray Dalio and his article, friends. He's saying if we print up here, okay, and he basically said he read between the lines, and I'll show you. He goes, oh, Jay Powell was asked, hey, what's going to happen with his balance sheet, the QT stuff? You know how I show you others BTC, friends? I'll show it to you now again. You know how this is what he's talking about, right? Uncle Ray Dalio said Jay Powell was asked, and he admitted, now that we're stopping QT, he says we are going to refill it at some point in the future. And you got to listen. Politicians, they're always lying. But, friends, it's like the devil. They let you know what they're going to do ahead of time. It's because basically they've spoken about it so much. Okay, they will like let out a squeak, a pip squeak from a little mouse. Okay, like pip. He let everyone know. I'll show you. Look at this. So Ray Dalio, this is how his article starts. Did you see that the Fed's announcement that it will stop QT and begin QE? While it is described as a technical maneuver, any way you cut it, it is an easing move, and it's one of my indicators to pay attention to in order to track the progression of the big debt cycle. And then he says, as Chairman Major Loser Powell said, at a certain point, you will want reserves to start gradually growing to keep up with the size of the banking system and the size of the economy. So we will be adding reserves at a certain point. Boom, there you go. They just let us know they will be printing in the future. Why isn't the market going up? Emotional cycles, that's it. Emotional, business, whatever cycle. Cycles are cycles, they're more powerful. For whatever reason, people saw... See, if we were in a time to get bullish mode, people would have looked at that and they're like, oh, bro, they just told us they're going to do QE. Let's go. But because we're just in a cursy, cycly McCycle mode, everyone focused on Major Loser saying, I'm a major loser. It's not guaranteed that I, as a major loser, will cut rates in December. They focus on that, okay? It just depends on how the market feels. So you're adding context now. We're adding context. So obviously it's 50-50, man. It's 50-50. Like, the way I see it, though, if crypto goes up, if stocks continue to go up and the bubble doesn't pop yet, in the future, you look back in this moment and you go, oh, this was the critical moment. This is the critical moment. Everyone's saying stocks are high, but we're saying, hey, man, I think AI really is going to change the world. I think AI and robotics are going to change the world. I think they've got to have their bubble mania. I don't think they're in a bubble yet. Yeah. Friends, remember, I'm outside of the bubble. You and I too. We don't have the stocks. You don't have Nvidia and stuff out here. Everyone in them, they're like, oh man, it's so outrageously high. But because we're in crypto, we're in the depressed zone. We know retail's not here. But with them, it's scary because they've seen it go up and up and up because they're like watching these things go up, right? So continuing. So remember, Ray Dalio said, he goes, look, they're going to print money now and it's going to be a melt up if they do it. And inflation's going to get too hot. By the way, that's exactly the ghost fractal of late 90s. That's what happened at the end, friends. When the Nasdaq went parabolic, inflation got hot again at the very, very end. They hiked rates and the bubble popped. All right? So, look, this is what Ray Dalio says. While I would expect the mechanics to work as described, the conditions in which this QE would take place are very different from those that existed when they took place before, because this time the easing will be into a bubble rather than into a bust. More specifically, in the past, QE was deployed when 1. Asset valuations were falling. He's pretty much saying GFC 2008, Greek's debt crisis with Euro, they did a QE there. They did a QE zombie virus. He said, hey, they were always deflationary busts. CPI, the Kippy, was about 1.8, 1.5, and then it went negative, and they're like, oh, we've got to print money. He goes, this QE, we're doing it as things are inflating. Why? What's going on? Well, this is just what happens with economies over time, friends. There's high inflation, low inflation, high growth, low growth. We're just in a different regime than before. Okay? That's it. The economy was contracting or very weak before, inflation was low or falling, debt and liquidity problems were large, and credit spreads were wide. Okay? Do you want to know what's funny, friends? As I was going through that, I was like, Habibi, let's play some angel music for us, okay? Habibi, sit down. Sit down and grab your lollipop, okay? Just yours. I was here during zombie virus, all right? You guys weren't bullish. You lying sacks of shit. You weren't bullish at all. I was here. You were all scared. Friends, I'll tell you what they were saying, okay? They were saying there's enormous risk right now. They're printing money, but that doesn't fix the supply issues. It's going to be purely deflationary. We haven't made more stuff. Do you remember Elon Musk coming out saying we can't just print money, we got to make more stuff? They weren't bullish, but no one was bullish at the bottom of this zombie virus. You guys can go suck a fat one. Now you're coming out with your big fat essay saying, oh, you better be careful. There's an asset bubble. You know, literally, sit on something and rotate. I was here, friends. I was literally down here, okay? They were not writing their essays saying, everything's going to be fine. Go all in. You think they were saying that? No. They were writing their essays. They were going on CNBC, right? Unzipping their shirt on TV saying, the economy, the economy, there's a deadly virus out there. The economy and the supply chain and the printing of money has a problem. It doesn't make more stuff. And we literally went up only. Literally up only. Didn't feel like it, by the way. Felt like it was all game over. Okay? Every step of the way. So that's why I'm looking at this. I'm like, oh, like you're coming out with another essay saying, oh, be careful of this one. You got to remember, friends, as well, Uncle Ray Dalio is a good man, okay? But Uncle Ray, he's very wise, okay? You know Uncle Ray Dalio. Friends, Uncle Ray Dalio, he's very wise. Do you know Uncle Ray Dalio? Do you know he's studied economic cycles for literally the past 2,000 years? Do you know that? He literally found every single economic account, even like, friends, Jesus times. Every single parts around the world, they studied everything. And they got their charts, they made their own inflation indexes. They got different accounts, different scribes, how much items went up and down. They collect data all around the world, different countries. Yeah, so this guy's been looking at for like economic cycles literally since the beginning of time itself. Okay, wild. So when he can see the empire rising and falling, you got to remember, he's looked at, he goes, oh, I know how this goes for 55 years. When he says, oh, we're coming towards the end, what's the end, bro? You know? Like 7 years is a long time. You know what I mean? 7 years is a long time. So I'm just showing you he's like ultra deep macro. Deep long-term macro, okay? He also continues here. He says, so quantitative easing was a stimulus into a depression. Today, the opposite is true. Asset valuations are at highs and rising. For example, the S&P 500's earning yield is 4.5%, while the 10-year Treasury bond is 4%. The real yield is 1.8%. And he tells you the risk premium. The economy is relatively strong right now because real growth is 2% on average, and unemployment is only 4.3%. Inflation is above the target at a relatively moderate rate. Credit and liquidity is abundant, and credit spreads are near record lows. So, look, friends, I'm going to pause you right there. You won't get the answer from Uncle Ray. You're not going to get the answer from mainstream TV. Your friend Tommy here is going to give you the answer. And you know the answer. I've told you this thousands of times. There's a big debt. The system is rigged. Someone's paying off the debt, bro. Inflation up, inflation down, doesn't matter. They make the inflation. There's a big debt. Who's paying off the debt? The middle class. The lower class. Anybody who works a job, you're paying off the debt. You earn money in fiat, you're paying off the debt, bro. Yeah. Your savings are forced to buy the government bonds. They're printing at 8% per year. You're getting a dog shit 2, 3, or 4%. Where's that difference going? The canteen effect, the insiders, the banking scum, and you're paying off the debt, bro. They did this in the 1950s, after World War II. Everybody came back. A lot of the population was dead. The government had to pay off the war bonds. They call them war bonds. Okay, friends, this was absolutely insane. They were printing at 10% per year. Your war bond only gave you 1.5% per year. Let me show you how aggressively scammy that is. That means, friends, let's get the calculator. Okay, that means you earned, okay, let's do it. In 10 years, the population earned basically a 2x on, no. In 10 years, friends, from 1940 to 1950, they came back from World War II, okay, whenever it was, you only got basically 20% more dollars in 10 years, okay? How much did the average cost of goods in the economy go up, though? They were going up 10% per year. All right, now, so if you had $100 at the end of 10 years buying the government bonds, you got back $120. Yes. Let me show you how much the economy's prices went up. They went up by 2.6x. Oh my gosh, what a scam. So, okay, $100 your wage in the bonds, $100 for your food. By the end of 10 years, your bonds, you're $100, right? You got $120. But how much are items in the economy now? How much is your food basket? $260. And they will start at the same. Yeah, that's what they're doing right now. That's what they're doing. Yeah. So it's funny, like Ray Dalio is saying, be careful, there's gonna be a melt up. Habibi, this is the whole plan. It's like going to an army general who's about to nuke the enemy saying, be careful, there's gonna be explosions if you nuke them. There will be dead bodies. And he'll look at you and go, yeah, bro, that's the point. That's the point. It's by design. That's exactly what's happening. Okay? So that's why, friends, when he talks about today, the QE today is stimulus into a bubble. Okay? That's what he's talking about. All right? But I've given you the truth of what's really going on. So it's kind of like he's saying, hey, governments, be careful. And I'm sitting, what the hell are you talking about, dude? They literally designed the game to do this. It's literally, this is the programming. Right? That's why, friends, if you look carefully, look, there's a bull case and bear case for crypto. One of the bear cases is, I'll give you the bear case, the real bear case. The real bear case is they're going to print, but they're going to do a controlled demolition. How aggressive is the controlled demolition going to be to make the politicians come in for the rescue and say, ha ha ha, I've got the big lollipops. We got to print money. We got to fix everything. Okay. You know, right now, see, you could make a case for or against it. The thing is, right now, every single person is struggling. Everybody wants the money printer on. Everyone. You have maximum political backing here. Yeah. You don't have a single person saying, oh, be careful, be careful. No. All the middle class, they want the money printer. They said, turn it on, dude. Do something with it. Make us better again. QE would not be stimulus into a depression. It would be a stimulus into a bubble. Let's look at how the mechanics typically affect stocks, bonds, and gold. Okay, and he says, because of the fiscal side of government policy, it's now highly stimulative due to the huge debt. QE would effectively monetize government debt rather than simply re-liquefy the private system. That's what makes it happening this time to be different. He says this looks like a bold and dangerous big bet on growth, especially AI growth, financed through very liberal looseness in fiscal policies, monetary policies, and regulation that we will have to monitor closely to navigate well. Okay, so you gotta remember, friends, Uncle Ray, he's got what, like 50, 60, 70 billion. He's old money, you know what I mean? He's part of the system. Right? He likes China and stuff as well a lot. So I'm giving you the truth. That's the harsh truth. You see, the truth is Ray Dalio is like, oh, be careful, governments. Something can go wrong. And I'm here saying, wake up, you idiot, blue-pilled cuck. They know something's going to go wrong. They do the controlled demolition to make it go wrong. And then they come in with the solution. And the solution's always the same thing. Here's a button. It prints money. Let's push it. Every time. Okay? Someone's paying off the debt. Someone's paying off the debt. Friends, not a single person goes back to zombie virus 2020 and says we shouldn't have printed. Who says that? No one did. Why? Because something was engineered there, dude, obviously. They said, oh, we had to print. Hey, zombie virus came out. Oh, really? I wonder what the next one's going to be. We had to print again. Ultimately, this leads in gold higher, Bitcoin higher, crypto higher, altcoins higher. The business cycle has to turn around on this, okay? Until it gets too hot, and then we'll see what happens. Are we going to get that true melt up? If we do get a melt up, you're going to get a lost decade of stocks. That's why some people say as well, friends, like if crypto, that's why, like if you look at like Arthur Gaze and stuff, everyone knows this. That's why if you look at Arthur Gaze, people who like don't look at the 4-year cycle, that's why their targets are like $1 million Bitcoin. Because what they're doing is they're seeing AI and they're seeing Bitcoin and they're like, I wonder if we both do a super massive parabolic run and then we have the biggest bear market of our lives. That's why Uncle Bobby as well will mention like a very long secular bear for Bitcoin, which I'll just show you what it would look like, okay? It would look like a hyperwave. This is it. This is what everyone's scared of selling. It would look like a hyperwave up here. And then when you come back down, okay, in the next bull, it never makes a higher high, which Bitcoin's never done before. It's like Bitcoin got to 1 million or 950K, come back to 650. Everyone thinks it's going to go for the bull market and then it has another bear. Okay, and then you have a literal that completes what they call like that 16-year cycle. That's why a lot of people will say, hey, just keep some Bitcoin just in case. Just in case you get one of these big scenarios, right? So friends, I've explained it here for you. That's why I've given you this juicy update. Ray Dalio, it's funny. He says AI is a bubble. See, he's still making it 50-50. He's like saying, oh, you know, but actually, not really. He said, oh, major loser Powell said we're definitely printing. That's how he started it. He said we're going to have to fill up the reserves. We will have to fill up the reserves at some point. They literally told the market, we're going to print money. So when they do it, we've already been told. It makes you wonder, friends, this controlled demolition, like we're begging for it. We're begging for it every time the stocks go down. We're saying, turn on the money printer. It's by design. Because what happens? When they turn on the money printer, who gets the currency units first? The insiders. They get the cheap currency units first. They buy Bitcoin, buy gold, buy real estate, buy stocks first. And then 60, 90, 120 days later, those cheap borrowing rates slowly seep into retail. But retail is always like 3, 4, 5 months behind. You getting it? Now, you get this. This is what we've known this from the start. It's just like, it makes you think though, when we have this hyper volatility junk, what's really going on? Who's manipulating? Yeah, it's because it's like, it makes you more wiser and better at the game. If you know the long-term game, so every time you see manipulation down, just call it manipulation, right? It could be supply, demand, whatever. Supply, demand, the Chinese exchange cabal, it doesn't matter, dude. Like, if you know insiders at the government, they know they're going to print money. They're smart. They're not like retardios. They're smart, friends. They're very smart. Even Mr. St. Wolf from Pulse Chain Community, he'll tell you, dude, friends, these people know how to manipulate people. They know your weakest fears, dude. They go listen to everyone. So they know, they go, oh, we want to print money in the future. I know what we'll do. Let's smash the crap out of their market. They'll beg for the money printer. Because when they press the money printer on, them and their friends get to benefit first. And thus, you have this perpetual machine. You have a constant incentive to break the system somewhere, and you have the solution ready on the shelf. You pay the economists, you pay the doctors, you pay the talking heads on TV. They all come out with the same opinion. They go, oh, the Federal Reserve should cut rates by 9% and put them negative and actually print money. Yeah, because they get it first. We're in crypto, though. That's why we're holding crypto, because we're trying to front run that. And everybody who's trying to wait and time it, they're going to get bonked. Let me know what you think, friends. Like, subscribe, belly button, or catch you in the next one.